So let's go on to the next question for our panel. The real estate markets have benefited from some pretty strong tailwinds for the past several years. What are the opportunities that you see in your respective markets? And are there certain asset types that offer an opportunity for upside? And are there certain asset types or markets that concern you? So, Andrew, let me start with you. Grosvenor has a very strong presence in several key markets in both U.S. and Canada. You're in Washington, D.C., San Francisco, L.A., Seattle, Vancouver. Why do you pick those markets? And are there more opportunities there? Or are you looking at other markets?
I'll answer the second question first. We've come to believe at one point we were in 17 markets with 5 different property types. Now we're really in seven going to be 6 markets. And we're really, sort of actively in 2.5 property types: retail, residential, and mixed use. A mix of the two. What we look for is, and I don't have your view of how. I like a really strong, high-value service sector. I don't believe that manufacturing jobs are going to come back in significant numbers to the U.S. No matter what you do. Yes, you will have in situ type manufacturing, construction, and so on. But in terms of competing with low-wage countries, it's going to be a while. And I think Canada's we have consistent immigration. We grow every year, and a lot of those immigrants are quite young. Anyway, going back to so we look at basically nice, vibrant places to live, high-value service sector, educated people, good, solid infrastructure. These sorts of things that are actually quite hard to duplicate. And when I think of all the sort of best place, I'm a Vancouverite, but the best place in our portfolio is San Francisco. It's such an attractive place to live. It's vibrant. The city's big. The urban core is amazing. The trouble they've got with the urban core is the trouble we have with the urban core here, as Don mentioned, we're not willing to densify it. Now, they actually have more, I'd argue, historical reasons to preserve and not, but you can always densify. The trouble with densifying is not what you can do, it's the political opposition you're going to get. And then, believe me, in San Francisco, after they've finished suing you and voting down your propositions, it's very tough to if you think you got it tough here, try it in San Francisco.
To get land and title there.
Yeah.
Now, in all those cities, you have large presence of staff in each of those key cities, which I think is really important. I think a lot of the audience get the West Coast, LA, San Francisco, Seattle, there's a lot of similarities. But can you just tell us about Washington, D.C., like why that market?
It was it's a city that's it was not a very nice place 25 years ago. It's now a very nice place. There are lots of young people working there. During the great financial crisis, it was the best place we had. We had government. But government's steady. It's like Edmonton's doing better than Calgary right now. Mm-hmm. Victoria has done better than Vancouver at different times. Mm. But anyway, but it's also a very nice city to live in.
Okay, so John, Venterra is very focused on one asset class in a very specific segment in the U.S. What was behind your initial strategy to go to the southeast U.S.? Mm-hmm. And are you going to? I think you've indicated this, but are you going to continue with that strategy? I think so, and it's working for you.
Yeah. Just before I go into that, I'd just like to comment on Andrew's point about immigration. Canada does have a lot of immigration. My advice to the Prime Minister would be to open the borders wide, get even more immigration. The average immigrant in Canada is in their early 30s. The average immigrant in the States is 18. They can walk across the border. You want to get...
Not anymore.
Well, okay. Not yet.
Yeah. I love the controversy. It's good.
We want to get the average age of our immigrant down so they can pay into the system for longer, but we want more immigrants. Okay, so yeah, I'm committed to the markets. You know, this is going to sound really corny, but I do believe it. And that we'll stay in our existing 10 markets in the southern states. We're going to expand to others. And the one thing in common is that we're going to invest in places where we believe that the American dream is still achievable by the average person. And I'm going to explain what that means in a bit and why there's certain markets we believe it's achievable and others that aren't. But probably people here have watched the show Anthony Bourdain on CNN. It's a very popular cooking culture show. This past month, he did a profile in Houston, and it was representative. A lot of things he said in there were representative of our 10 markets, but it was palpable, and I'd really advise you to watch it. He was shocked. He's an American. When he went there, he says he had no idea that Houston was what it was. He was expecting baseball hats and NASCAR racing guys, right? And there was unbelievable amount of religious diversity, racial diversity, living in harmony, being very positive. And it wasn't like he was doing an advertisement for investing in Houston, but that's the end result. That's how I certainly looked at it. And the reason for it is that you can be a PhD in engineering in any of our markets. In this case, it was Houston, and the city has a lot to offer to you. You can be an immigrant that is uneducated and doesn't speak the English language, and there's still an economic ladder for you to get on and work your way up. The dream still lives. And if you look at what's common across all of our markets is that they're very pro-business, they're very pro-housing development, they're very low on regulation. I mean, Houston doesn't even have property zoning laws, if you can believe that, are very light laws, and they have low taxes. So I did a back of the envelope, or I had one of our underwriters do a back of the envelope calculation. The average Ontarian pays 44% of their income to taxes. The average Texan pays 30% of their income to taxes. It's a 50% differential. And so, this is a philosophical, I think the writing's on the wall, but where do you think there's going to be a growing middle class? Where do you think there's going to be more prosperity? Where do you think incomes are going to grow faster? And where rents are going to grow faster? And I firmly believe, and I think the numbers support this, is that you'll find it in those markets where the government plays a smaller role.
So, John, I find that interesting that they would have more disposable income, yet they're still prepared to rent your product.
Yeah. Well, I don't know if it's there's other parts of the world like this, like there's Ireland or Dublin, where there's a fascination in Canada with owning a house. I mean, I understand it to a degree, but it's so accentuated here, and I think it's a shame actually, because you've got all that wealth, all that productive capacity. You've got young people, instead of focusing on their career, saddled with mortgages. I think there's a long term. I think it'd be better if we diverted more money to other areas. How you do that, I don't know.
Put in wealth management at Nicola Wealth, right?
Yeah, there you go. But just I want to throw a couple stats out to you. So if you take world-class city, like San Francisco is an absolute world-class city. New York City is world-class. San Jose is world-class, or Silicon Valley. The average person there spends 53% of their income on rent. Our markets, it's 29%. There's a lot more things that they can spend their money on. And I want you to go, when you go home tonight, I want you to go through a little exercise. So when you go online, go to U-Haul's website and see what it costs to rent a U-Haul to move from New York City to Atlanta or Dallas. And then look at what it's going to cost to rent that same U-Haul to move back from Atlanta or Dallas up to New York City. It costs 4 times more to rent that same U-Haul truck going south than north. And that's sort of an indication of the pattern flow. I can't tell you, it's maybe not be by the busload, but it's dozens and dozens of examples I've come across of young people in their 30s moving from New York City when they want to start a family. Because, again, housing's affordable. The ladder's there. You can have a better quality of life. I think those people will stay there longer. I think you'll see you'll see incomes grow faster, which they have in those markets, and rents are going to grow faster.
Thank you, John. So, Don, same question. GWL has a very large portfolio spread over Canadian major and secondary markets for almost all asset types. Can you tell the audience what your plans are for next year?
Yeah, sure. So an important part of what we do is the development side of our business. So like Grosvenor, we're a very active developer. We've concluded about $4 billion worth of transactions or projects over the last 15 years, and we've got about $1 billion of developments that are either under construction or in an advanced pre-development. And the reason we like development, I'm sure, is for the same reasons that Grosvenor does, which is we get a yield enhancement and a created value relative to just going out and buying an existing asset. And we get to bring new generation product in the location and asset class of our choice. So at the moment, our activities are pretty focused on industrial in Toronto and Vancouver. From a development perspective, we're also doing multifamily in both of those markets as well, and we're about to launch office in both of those marketplaces. And in terms of acquiring existing income-producing assets, very focused on multifamily for Toronto and Vancouver, downtown office in Vancouver, Toronto, and Montreal. And you know, the industrial activity that we have ongoing is quite focused on the fact that the lines are blurring between retail and industrial. So consequently, we've been aggregating and building large distribution facilities that basically are benefiting from the trends in e-commerce.